Hey guys, welcome back. Today we will speak about three things. I will disclose to you what stocks did I sell and what stocks did I buy this week, and then we will speak about impact of a coronavirus vaccine, which is obviously coming next year, and how much is it going to affect macroeconomy and stock markets, and then we will speak about Tesla and how is it going to be added to a S&P 500, how much does that matter to a Tesla investors, to a Tesla stock, how much of a impact can we expect in terms of stock price on Tesla stock, and much more. But as always, we will start with my portfolio. As you can see here, compared to the last week, my portfolio has lost around $600 unfortunately. But my cash position has actually increased slightly compared to the last week. My year-to-date return is still sitting above 27%. So since I will be actually telling you what stocks did I buy and sell last week, I think we can skip this part of my video and go direct to my trading. As you can see here, I actually sold 20 stocks of Berkshire Hathaway and I bought 200 stocks of Dropbox. And Dropbox is by far my biggest position right now. I have around 600 stocks. Value of that position is slightly below $12,000. So why did I sell 20 stocks of Berkshire Hathaway? There are actually two reasons. Reason number one is I wanted to buy some more stocks of Dropbox. And I didn't want to spend all of my cash position because I still feel that we are in a volatile period and I simply want to have some more ammunition in my portfolio if I see significant price decrease on the markets. And another thing is this. As you can see here, I gained actually 30% return on Berkshire Hathaway stocks in only a few months. So when I bought those stocks, they were trading at $181. And when I made fundamental analysis, when I checked outlook of Berkshire Hathaway, what are they doing, what are their investments, how much of free cash flow they are generating, and how much free cash flow are they going to generate in the future, my forecast was that conservatively, Berkshire Hathaway will hit $330 per stock in 2025. At least that is what I thought their value should be when I was analyzing their business. And again, if I bought stocks at $181, that would give me average return of 12.7% annually on average, and double-digit return, especially if it is almost 13%, is something that pleases me. So I bought 40 stocks actually of Berkshire Hathaway, and then I sold 20 stocks I think several weeks ago, and I had 20 stocks left. And now when they hit $233, again, remember, I wanted to buy some more Dropbox stocks and I had to choose one of my positions which I want to sell since I wanted to preserve some cash too. Since price of a Berkshire Hathaway increased for 30% in only few months, now this position of mine would give me on average only a little bit above 7% in next 5 years, which doesn't satisfy me. What I'm looking for is at least 10% return annually on my investments. And that is why I actually decided to liquidate this position. Because 7% return is not good, 12% return is something that I'm aiming for. I really hope this makes sense to you. Again, I bought Dropbox stocks. Now I own 600 stocks of Dropbox. I really like their business model. I really like what are they doing, their management, their balance sheet, their prospects, forecasts and future that is waiting for them. I discounted part of their cash flow, which they are artificially increasing by issuing shares every single year and compensating some of their expenses with those newly issued shares. I then discounted their cash flow with higher yields. I did all kinds of different conservative valuations and forecasts of their business, and every single time I got price stock which this company deserves is always in mid-20s. And since they are trading right now around $19, I simply had no choice but I had to increase this position. I'm not sure if I will increase it additionally in the future or not, because already $12,000 of my portfolio is sitting in Dropbox, but for now I'm really comfortable holding 600 shares of Dropbox. The next interesting news that we had around 10 days ago is that Pfizer and BioNTech concluded phase 3 study of COVID-19 vaccine, meeting all primary efficacy endpoints. Observed efficiency in adults over 65 years of age was over 94%. So this is really good news for our society, for the world, and for especially elderly patients. Not only that, but soon after Pfizer, there are a few more companies which are actually coming out with their studies, and they are also telling us that they have ready vaccine, although none of those are approved by FDA. But I doubt that all of them will get rejected. So basically we can expect to have vaccine next year. What we do not know is if this vaccine will be permanent. Basically, if you take it, you will permanently be protected by COVID-19, or is it something like flu vaccine, which you will have to basically have to take every single year. Another thing, so vaccine news is of course very good news, but the problem that we have with vaccine is that it will not be available for at least several more months. The economy still remains weak because we do not have vaccine yet. We don't have it right now. COVID cases are increasing rapidly in basically all countries of the world, and many of those countries are still having lockdowns. Some of them have them already, some of them are imposing them. Hospitalizations are going up rapidly. So right now situation is not good, but there are many signs that are telling us that 2021 will be much better year than this one. So what I'm trying to say here, we have very good news, but we will still have to wait almost 1 year before we have vaccine, before we have a lot of vaccine, so most of the population will be able to take it, to be protected from this disease. And then after that, we can expect real economy to start recovering. Of course, stocks and stock markets are forecasting machines. That's why we've seen once Pfizer went out with this information, we've seen S&P 500 going up for almost 5%. But interestingly, what happened is that a lot of tech stocks actually went down on a day when S&P 500 went up almost 5%. Basically, value stocks went up for 10, 15, 20 or 30%. Even we've seen cruise line companies going up more than 30%. We've seen hotel companies, we've seen casinos, and everything that is basically tied with tourism, retail, etc. going up. And on the other hand, tech stock companies like Amazon, Google, Facebook, Square, Zoom, The Trade Desk, all of those famous lockdown companies actually went down. What actually happened is that when Pfizer announced that news, all investors had to implement, let's say, put it that way, that new information into their forecasts. And now, finally, we have some timeline of when we can expect normalization of a behavior in the consumer markets. Because the longer we have lockdowns and all of these issues, the longer tech companies will see even higher revenue growth. And the opposite is for a value stocks and for a tourism stocks, let's put it that way. So even though we will not see any short-term impact of these news, mid-term and long-term, we will see a lot of changes because things will start normalizing more and more next year and going more into the future. And that's why we've seen huge growth in stock prices of value companies and other sectors which were hardly hit with coronavirus. And then we've seen slight decrease in tech companies. Of course, nobody expects tech companies to not grow anymore because of a vaccine, but the growth will be a little bit slower. That's why that had to be reflected in a stock price, which had to be decreased a little bit. You can, for example, take a parallel with the first part of this video where I have shown you average return that I expect on Berkshire Hathaway stock in the future. All of a sudden, in only a few months, future returns in next 5 years for Berkshire Hathaway went from almost 13% to 7%. And that's why I sold my stocks. Similar thing happened here. Once the vaccine came, rates for revenue growth for companies changed. For some, it changed upwards, and for some, it slightly decreased. That's why it had to be reflected on the stock prices. Another really interesting things that I wanted to mention here is this. Pfizer CEO sold more than $5 million worth of stocks as a company announced vaccine data. I don't know if this is against the law or it is not against the law, but I think that this is at least should be investigated. I mean, to sell more than $5 million worth of stocks after you go out with the new information and after you pump price of a stock more than 15% is something that should be investigated. I don't know, if I would be CEO of a company, I would never do that. I feel like CEO of a Pfizer is primarily looking at his performance, his compensation, and how can he reach most from his position, and he's not looking at a company and stockholders, not to mention patients and users of their products. This is really something that I would be greatly unsatisfied with if I would be Pfizer stockholder. In the end, we have a biggest company ever joining S&P 500, and that is Tesla. Tesla's market capitalization right now is almost $500 billion, and its stock price went up for around 20% once this news was disclosed. Why that happened? Well, as you all know, we have a lot of passive investors. What does that mean? Well, a lot of people don't stock pick. They don't choose even ETFs of some sectors, but they are just buying S&P 500. because it is diversified. You are betting on American economy, and that was very good thing to do in the past. So a lot of people are advocating it, and a lot of people are basically doing that. You can see here that passive investment vehicles reached more than $11 trillion at the end of November last year, and over 6 trillion of those assets are held in ETFs. Because I tried to look out how much actually is market of passive in investments, but I couldn't find the exact number. I took, for example, 5 or 10 biggest ETFs and assets that they are managing, S&P 500 ETFs, and assets that they are managing are about 2 trillion. Remember, market cap of S&P 500 in total is around 25 trillion. So let's imagine that passive investments in S&P 500 are between 2 and 6 trillion dollars. What would that mean? Well, Tesla will probably be amongst bigger companies in S&P 500, and Tesla's part of S&P 500 will be around 1%. So 1% of all S&P 500 passive investors will have to be invested in Tesla. And if we imagine that $6 trillion is invested in ETFs which are replicating S&P 500, that means that 1% of that amount of money will have to be invested in Tesla. And what does that actually mean? Well, that means that $60 billion of, let's say, artificial demand for Tesla stocks will happen in December. Of course, ETFs don't have to buy Tesla stocks immediately, but they have to buy in a very short period of time if they want to reflect S&P 500. And basically that is what they promise to their investors. And remember, market cap of Tesla is around $500 billion. So $60 billion is more than 10% of a company. And that will be really significant buying pressure. Of course, that is why Tesla stock went up for more than 20% when that news came out. So it is yet to be seen how much of that artificial demand is already priced into the stock, and if we will have additional melt up in a Tesla stock price, or basically this is it. But basically now you know why is everybody hyping this news, this change in S&P 500, and why is it so important to a Tesla stockholders. Thank you very much, and see you on my next video.